Stock market investors, welcome back to the channel. My name is Jason. In today's video, I got a good one for you guys. Today, we're going to go over 3 stocks that I think have the potential to double your money within the next year. I'm really excited about this video, guys. Let's get right into it. Check out your screen right now. As always, hit that like button, the hype button, and subscribe to the channel. The first stock we're going to start out with is Stone Limited. It's a leading Brazilian financial tech company that provides end-to-end electronic commerce and payment solutions. So over the last year or so, this stock has been getting pretty banged up. But we've seen a bunch of peaks over the last year or so, right? It's hit down in that range where it's at right now, 10 bucks. It's been trading super low right now, in my opinion. But we've crossed that $18 range here, it bounced up into the $16 down there. I think this is a great buying opportunity at $9.62. If we take a look at over the last 5 years, we could see it's definitely back in 2024 hit $17, $18, went back down to like $8, $9, and then it bounced back up to $18. This is a swing trade for me. I want to buy it under 10 bucks. Once it gets to $17, sell some covered calls, and if the shares get taken away, so be it. Put a stop loss at 16 bucks, and I think we can make a killing on this stock right now. If you go over to Simply Wall Street and you take a look at their estimate value, fair value, 83.7% below their fair value, which is great for us investors, right? Because we could really make a killing. They have cash flow value at $59.64. That is huge gains. If it even gets half of where they think the cash flow value is at, boom, we're talking some serious returns. So to get this stock up to $18, $20 per share, I think a double up is definitely in this stock's future. They've been soured on. There's no other way around it. But I do love this company. I think there's some serious potential. Year to date, it's down 34%. I think we could take advantage of that for sure. If we take a look at the company, break it down a little bit, the enterprise value is almost double what the market cap is right now. At one point, the enterprise value was $6.26 billion. It's trading at $2.62 billion right now. The trailing PE is at 6. The forward PE is at 8. These metrics are bananas. Price to sales and price to book around 1, exactly where we want them to be. I'm a big fan of buying this company under $10 per share. Revenue is coming in at $13.4 billion. Quarterly revenue growth year over year is up 11%. Gross profit, $10 billion over the last 12 months. That's what TTM stands for. I love that. Total cash on the books around $6 billion. Total debt, $17.58 billion. But I do think that the gross profits are going to take care of some of that debt in the long term. We take a look over here at Morningstar. They have more up-to-date numbers on this company. Long-term debt is around $4 billion. The rest is shorter-term debt that we saw in the other metrics. But this company's been trading significantly lower than where it's traded at in several years. And if you look at the growth in revenue, here up to here at this $13 billion range, right? It's the revenue at $13.4 billion is great. And it's up from $4.5 billion just at the end of 2021. If we take a look more in depth at this financial summary, we can see the gross profits around $3 billion. It's up over $10 billion now. Gross profit margins are great for this company, getting bigger and bigger and bigger as time goes on. I love where we're at right now with this company. I think the financials make a lot of sense. Now, investors, let's move on to this valuation. And if we could see, the price to sales has come down instrumentally. If we take a look at the current price to sales compared to the 5-year average, less than half of what it was. Price to cash flow looks pretty juicy as well. And if we take a look at the price to book ratio right here, 5 years, 1.56. current at 1.02, all below numbers over the last 5 years and their average. Price to forwards earnings over the last 5 years, it's been around 14. It's trading at 8 right now. I see some serious opportunity to make some cash in a fintech in a growing market there in Brazil. I like this company. I think it can make us some serious returns. Buying under $10 makes a lot of sense to me. And then the market cap at $2 billion, that makes no sense to me. And this is what I want to do. I want to find you guys opportunities that the market is missing out on. And another opportunity that I really like in this market is Chewy. They're like the Amazon for pet supplies. If you take a look, this stock has been decimated this year, down over 35%. Over the last year, down 45%. And if we take a look, this stock was trading in the 40s not too long ago, and it's just been getting destroyed over the last year. And if we look back in June of last year, this stock was up, closing in on $50 per share. We're getting it in the low 20s. I think that's a great opportunity. So Chewy long term is going to have ebbs and flows with the overall economy. Obviously, a company that delivers a lot of their products and has to pay to get their products delivered is going to be affected by these high gas prices. But that sounds like an opportunity to me moving forward. And if you've ever experienced this company, their customer service is second to none. I love this company. I'm a pet owner, and it's the only company I will buy pet supplies from. Back in January of 2025, the market cap was at $15.87 billion. It's under $10 billion now. So the trailing PE, 44.7, forward PE at 15. It's the lowest it's been in a very long time. I think this is a huge opportunity. The PEG ratio is 0.40. Price to sales 0.78. They are crazy low numbers for this company. And I do think over time, these brick and mortar stores like Petco are not going to be able to hold up with a company like Chewy. One of my favorite newer companies in the market. I think there's a huge runway of opportunity with this company. I think the fair value, according to my numbers, is in the 40s. We'll see what Simply Wall Street has to say about their fair value. If we take a look at their numbers, their cash flow value is over $60 per share. So even at my fair value in the 40s, it's trading considerably lower than both of those numbers. I think this is a huge opportunity for Chewy stock to make us a ton of cash. $12.6 billion in revenue. Gotta love that. Quarterly growth. The growth is slowing down. That's why we have seen this pullback in the stock. I do think this is only temporary, so we're going to see this ramp up very, very soon, in my opinion, for this company. Cash flow, they got $878 million on their balance sheet, only $556 million in debt. Levered free cash flow, about $500 million over the trailing 12 months. That could wipe out this debt very easily, in my opinion. If we take a look at EPS, it has been ticking down, right? So we need to come back and bounce up. But if we take a look here for Q1 forward year 2027, we see a huge jump in expected earnings per share, right? So the red and green are the actual numbers, and this is the estimate here. The estimate, huge, 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 huge number. And that's great. That's what we want to see. We see this downtrend, and then they think that this company is going to be very profitable next quarter with their estimate at 43 cents in EPS, which is a lot higher than it was last quarter at, 27 cents. And if you take a look over the last several quarters, the revenue is extremely consistent, right? But the margins are getting constrained by the high energy cost right now, right? And there's 20 analysts covering the stock right now. Average estimates are solid numbers, guys. And then if we take a look at earnings per share, it looks really good. High estimate's $2.24. That's crazy high, right? That's about, what, 60 cents per quarter? So when we take a look at these earnings numbers, a year ago EPS $1.62, and if we could do $1.97 or $2.24 in EPS, I think there's great growth trajectory ahead for Chewy stock. I think this is a company that could have huge potential moving forward. Chewy stock right now is trading at $21.28. The 5-star price for buying for Morningstar is at $18. So we're getting really close to those numbers. If this stock gets under $20 per share, it's a must buy in my opinion. And I definitely think has the runway to get back up to $40 within the next calendar year for sure. Price to sales is trading at 0.73. Price to earnings normalized 16.67. All the metrics look really, really good to me. Free cash flow, $600 million. Cash on the balance sheet looks strong moving forward. I do want to keep my eye on this. So the downward trajectory keeps happening, then we have to reassess. But I think the value is there. And if we take a look at the estimates like I showed you guys, we saw a huge jump. What analysts are expecting next quarter for this company, right? To go up to 44 cents in a quarter, up from 27 cents. That's a huge jump. And they're looking at this company and projecting that they're going to start to normalize these numbers and get back to serious profitability. That's why I like Chewy stock there. All right, another stock is a newer company. Here it is, Path, ticker symbol. This is UiPath. It's an enterprise software platform specializing in robotic process automation, RPA, and agent business orchestration. This company has what it takes to launch us into this robotics AI future that we're going to be in real soon. So there's 3 different segments, core components to this business: Studio, Robots, and Orchestrator. The Studio is a visual, low-code interface used to design automation workflows by dragging and dropping activities. The robotics section is the execution forces that run the automation. They can be attended to, working alongside humans or on a desktop, or simply unattended in the cloud or the background of servers. And then they have the Orchestrator, a centralized management web application used to schedule, monitor, and govern the deployed digital workforce. So this is like an AI workforce. And I love this technology. It's really cool. And I think this company is super undervalued. If we take a look at this stock, fair value as around $13 per share. The 5-star price for this company is $11.55. It's trading below that. Had a good day today, up over $10, but just as of yesterday, it was trading at $9.67. I think that's a great opportunity for us to get in at really good levels, right, guys? Price to earnings at 13.43. The market cap is only at $5 billion right now. I think this company, a newer company, obviously, but I think if you look at the chart, could definitely get back up in that $20 range really soon. We've touched $19, $18 range twice in the last year. So I think with some interest rate cuts and another leg up for AI and robotics and automation, this stock could bounce right off these lows. It's hit similar lows before and bounced off them. And I think this is a good spot to get into the stock, down 21% year over year. And this is a really interesting company. Evolution into agentic AI. Agentic AI could be the future of the way AI is deployed through various business interfaces, right? The system integration, I think, could be huge. It bridges modern cloud services with older legacy systems. And that bridge, a lot of people are going to have to cross that bridge as we get into this AI revolution. And it really starts to take place over the next several years. I think getting in at this price point is just purely ridiculous, right? Under $10 per share. UiPath becomes first business orchestration and automation platform with native integration for coding agents, unlocking enterprise transformations at scale. That seems like a business I want to be invested in. I love this company. I think this is only the start for where this company could potentially go moving forward, right? The market cap was almost $8 billion before. It's in the fives now. Valuation metrics have improved significantly with the PE ratio dropping from over 300 down to 36.67. That's crazy. Revenue growth accelerating at 10%. So this company is growing the way we want it to be growing. The lowest PE it's been trading at in forever, right? The PE not too long ago was at 28, and that's even a good deal. But at 13, it's ridiculous. The PE ratio at 0.37 is crazy. I like what this company is. Total debt, $81.25 million with $1.5 billion in cash. These are the companies that I like to invest in when I talk about AI, automation, and robotics. A company that was very similar was Palantir, where they had all this cash and no debt on their books. So they have money to invest and grow. I love it. Lever free cash flow over the last year, $473 million. Another reason why I like this stock, the cash flow statement looks really good. Trailing 12 months at $473 million. And another reason why I think this stock could be unleashed to the upside is the short percentage of the float. You're shorting a company at nearly 30% with this balance sheet is insanity. You have to be crazy to short this company at these levels, right? And then when it tears up to the upside, it's going to happen fast. Super, super fast, right? $1.5 billion in cash, only $80 million in debt. Why would you want to short a company with all this serious potential now at this point with stuff like this happening? First business orchestration and automation platform with native integration for coding agents, unlocking enterprise transformation at scale. That doesn't sound like a company I want to short. All right, stock market investors, that wraps up my 3 stocks that I think can double your money within the next calendar year. I think all these stocks are exponentially undervalued for what they're going to be worth several years down the road. Stone has a huge platform, very similar to Amazon and Shopify. And then we have Chewy, which everyone needs to get their pet supplies, right? I think pets are going to be a growing market over the next decade or so. They're tremendously undervalued. I love their customer service too. I personally use Chewy and I love them. I think this could be a $40 to $50 stock in a year or so, definitely. And then UiPath, this company has the foundation to really have its grasp on this orchestration and automation platform that's going to kind of link the old school with the new school, and they can be this bridge unlocking serious enterprise transformation at scale. I think this company has serious potential. Buying under $10. I think this could be a great swing play over $18 to $25. Get in, get out, double your money. That's what I like. Don't forget to subscribe.